Ladies and gentlemen, I'm at the 2025 Australian Gold Conference, and with me is Ainslie Bullion's Paul Engeman. Now, normally, Bitcoin and gold, most people would say they go as well as chalk and cheese, they go as well as Mars and Venus. You stand on one camp or the other, but guess what? Times have changed, and not only that, Bitcoin and gold, as I've always stood for, they have a common enemy, which is the fiat currency system. Now, Paul, can you tell us a little bit about how Ainslie Bullion came up with the idea of the Bitcoin and Bullion Fund? What exactly is it?
Yeah, sure. So look, we've been a bullion dealer for 51 years, right? So that's our mainstay. But in 2017, we started Ainslie Crypto because we saw that nexus that you just identified of good quality crypto. Let's be real. There's a lot of rubbish out there of value and scarcity, right? So and then in 2019, we actually combined the two worlds where we tokenized gold and silver on the blockchain. But this year, with Ainslie Wealth, we're launching the Ainslie Bitcoin and Bullion Fund, where we're actively managing the crypto, so giving people secure exposure to crypto, but actively managing those big drawdowns that people fear through gold and silver. So that in a sense, it's a wholesale fund, has an AFSL, and it's really just giving people that ability to get onto that Bitcoin trade and in a way that they can sleep at night, that they know it's securely stored, and that the bank will pay for it.
Okay, so to get deeper into the composition, now Bitcoin is a highly volatile asset, while gold is generally quite stable, but in certain parts of the gold cycle, it can actually get quite wild, which is what we're seeing now. I would normally hazard a guess that the Bitcoin to bullion ratio would be about 10% bullion, 10% Bitcoin, and then 90% bullion. But you're probably going to tell me that I'm way off my mark. Is that correct?
Well, and that's where the active part comes in. Our whole investment thesis is around global liquidity. We've moved from a monetary policy dominated regime to a fiscal policy dominated regime. Government deficits, debt means that it's all about liquidity. So if we look at, so what are the best assets? What are the most sensitive assets to all that liquidity that has to keep refinancing this debt, paying the interest on the debt, and then more liquidity for the continual deficits? Nothing comes close to Bitcoin. But as you said, it's volatile, right? But if you make volatility a feature, not a bug, then it's about, so when that liquidity cycle turns, when Bitcoin comes up pretty sharply, then we move to gold and silver. But the beauty is, if you look at all of these assets and their sensitivity to liquidity, gold and silver are right up there with the NASDAQ, right? So you actually get your safe haven, enjoying a liquidity positive environment, and we're seeing that right now. We're seeing gold and silver taking off. That's not because of any great fear or any. That's really just people seeing the sheer scale of that monetary debasement that you just talked about in the fiat system. So when you see that scale of debasement, you're looking for rare assets. Things that you can't just print and create like they can with fiat. So we all know the gold and silver story very, very well. Fewer people understand Bitcoin in terms of it's exactly the same. It's a scarce asset that can only ever be 21 million Bitcoin. The rate of supply halves every 4 years. It's actually now overtaken gold in terms of stock to flow ratio. So it's becoming rarer in terms of new supply. So all it is gold, but instead of armor guard trucks and vaults, we use the blockchain for transparency and security and storage. So it's they are very, very similar assets, but because Bitcoin is so early in that adoption cycle, it's just getting that bigger volatility as it finds its steady state, as more and more people come to trust that it is a stable asset. At the moment, it's beautifully volatile. Make the most of it.
Okay, so Paul, let's talk about the security and the storage. Most people know that with bullion, if you don't own it unless you hold it. And there are security deposit boxes and facilities where it's heavily guarded with padded doors and all that, and fingerprint security. With Bitcoin, there is still a doubt around people believing the security of the Bitcoin. So can you tell us, in your fund, how is the Bitcoin held, and what is the security measure? What are the security measures that are in the fund?
Sure. And look, just as in the gold space, we talk about if you don't hold it, you don't own it.
Yeah.
In the crypto space, they say not your keys, not your crypto.
Yeah.
So it's all about those keys. So to be clear, the blockchain itself, the Bitcoin blockchain itself, has never been broken into.
Yeah.
Right? And technically can't be. It's immutable. So technically, someone can break into a vault. How's it very good? Won't happen. But it's the same thing. So the blockchain is that immutable safekeeping mechanism that can't be broken into. So then it is, okay, but who owns the keys, right? Who owns that private key to the wallet that holds the Bitcoin? In that sense, we use Zodia, who are an institutional custodian, backed by NAB, Standard Chartered, a whole lot of large institutional players.
Yeah.
And they have very high levels of security protocols around keeping those keys cold and unhackable. So that's the play for Bitcoin. On the gold and silver space, for the fund, Reserve Vault is where that's kept.
So with the individual investors into your fund, do you have a separate account for them, or is it a pooled fund where they have a claim to the ownership of the amount? So how does it work? Is it unallocated or allocated?
Yeah, so it's it is effectively pooled like any fund, right?
Yeah.
There's a shared pool. So you're buying units in a trust, so it's a trust. So there's clear ownership through that trust structure, but you have so many units within that trust. But absolutely, the gold is pooled, silver is pooled, and Bitcoin, but all purely each for just the fund. So it is segregated in that sense, but all the investors in the fund own a share of that amount. And then every week the investment committee looks at the allocations, looks at where we think we are in the cycle and what we think that allocation should be of Bitcoin, gold and silver, and we'll adjust that on a weekly basis, and everyone's on that same basis.
So 2 more questions. This one is on what is the recent performance of this fund, and what is the benchmark you use to measure your performance against the assets that you're
It's a great question, and the eternal problem of a new fund is that lack of track record. So there's 2 answers to that. So we launched the fund a month or so ago.
Oh, right.
On an annualised basis, it's tracking at about 45%, I think, right? So that's not an accurate, like no one's going to see a month as a trend.
Yes.
What we have done is a back test back to the beginning of 2019.
Yeah.
As soon as you say back test, very understandably, people get a little bit sceptical because people can cherry pick.
Yes.
So we're very clear. Absolutely. When we started at the beginning of 19, we did that for a couple of reasons. Yes, it was the bottom of the cycle, right? But we are talking about cycles, so that's the logical place to start. We could have started in the previous cycle, right? Previous bottom, and got that amazing rally that Bitcoin had in the 17 cycle. We think that's disingenuous. We don't think we'll see that sort of rally again. We think what's happened since 19 is more indicative of, and this will plateau, it'll become less volatile over time, obviously. So we thought that's a more defendable position. We include all the fees and distribution. So what that back test tells us to today is it's got a compounding annual growth rate, so a KGAR of around 56%. So
wow,
there's not many funds that can match that. And when you say those sorts of numbers, people understandably get sceptical that they must be speculative, but we're using real spot assets.
Yeah.
We are not using leverage. We are not using any derivatives. We are just managing it in a new investment paradigm that is playing out, and that Bitcoin and gold and silver highly correlated to.
So final question is, what is the minimum investment for people wanting to join a fund, and what types of fees do you charge for management fees?
Yeah, sure. So it's a wholesale fund, I've got to stress that, so you must meet that wholesale investor mark.
Is it $2.5 million as a sophisticated investor?
2.5 or 2 years of $250,000 income.
Yeah.
There is a carve out that you can just spend $500,000 and somehow the rest doesn't matter.
Right.
That's the rules. So that's the minimum investment is $50,000, and so in terms of fees, the management fee is 1.5%.
Yeah.
There is a performance fee, so any outperformance of RBA cash rate plus 4%.
Right.
Yeah, so that's our hurdle.
Yeah.
So we're a decent sized hurdle.
Yeah.
So right now we've got to outperform by close to 8% before we get any performance fee. It's then 15% of that. So
Okay.
highly incentivized to do the best because we get a share of that. But we have a suitably high hurdle rate that you know that we've got to work hard just to get to that.
Well, there you have it, ladies and gentlemen. Here's proof that Bitcoin and Bullion are not actually enemies, but they're good friends. Ainslie Bullion has made that possible. There's a possibility, if you are a wholesale investor, to sign up and become a member and be invested into the Ainslie Bitcoin and Bullion Fund. Paul, thank you very much for all this.
Thanks, Brian.
All the best going in the future. I'm sure we'll touch base with you soon.
Thanks very much.
Ladies and gentlemen, if you like this video, make sure you click the like button, subscribe to our channel, check out the links in the Australian Gold Fund, Gold Hub Australia, or in the description below. Thank you once again, and God bless.